walk through the IRS sales tax deduction calculator, which you would use if you were filing Schedule A on your income tax return and itemizing deductions. But let's take a deeper look at it. So when you itemize deductions on Schedule A, you're able to take either state income tax into consideration or state sales tax into consideration when itemizing deductions, but you cannot take both. So only taxpayers that would use the sales tax deduction as opposed to the income tax deduction would have the option to use the calculator. For example, in states that don't charge an income tax, such as Wyoming or Texas or Florida, this would be an easy calculation. For high income tax states, such as New York and California, then you would have to actually make a decision between which one provided the bigger deduction, either the sales tax or the income tax. And finally, the last consideration is whatever you decide, the total deduction for all combined state and local taxes, whether it's sales tax, whether it's income tax, whether it's property tax, is $10,000 per year. So you may be in a position where the documentation of your $10,000 of taxes is much easier without having to go through a sales tax calculation. If you live in, say, New York State and your income is high enough, you might simply just keep your W-2, which shows your $10,000 plus of income tax, and you don't have to worry about this. But for those of you who do decide to choose sales tax as the larger of either sales or income tax, there's another decision that you might have to make. You can actually choose one of three different ways to come up with your sales tax deduction. So you can use the actual expenses method where you keep all of your receipts. You can use a sales tax table and calculation worksheet, or you can go to the IRS website and use the sales tax deduction calculator. So this is the demonstration that we're going to go through. So we'll post the link to the IRS website where you can go and run this calculation on your own, but I figured we should at least start with just kind of what this looks like. So you do need to have some things ready, such as receipts for any specific large purchases that you made, probably your income statements, and then you're going to be asked the zip code of your address. So on this page, there are also some frequently asked questions that you can enter pretty much just to get a better understanding of how to use this calculator. But let's go ahead and begin. So we hit the sales tax estimator, and the first thing that it'll ask you is the tax year that you want to use your sales tax deduction. So if you're filing an amended return, you can go back a couple of years, as far back as 3 years, right? And then you could use whatever your sales tax deduction was in 2021. So I think as of the time of this recording, 2022 is the latest tax year that you can use to run the calculation. And again, the IRS updates their tables every year. So then you're going to be prompted to put in your filing status. So we'll put in married filing jointly. You're going to be asked number of dependents. And all of these are basically factors that go into the calculation. And then finally, in 2022, did you purchase or start a long-term lease for any of these things? So a home renovation, you can hit the question marks. You may be able to take a tax deduction based on the sales tax of certain items that you purchased, depending on your state law. If you bought a home, then again, under state law, if your contractor is considered your agent in the construction or a major renovation of your home, then the contract states has to state that the contractor is acting on your behalf, following your decisions, and they're purchasing the construction material basically directly from your guidance. And in that case, you would take that tax deduction. So let's just pretend that we bought a car. This is, so if you bought a car and you paid, this whatever the tax rate was, let's just say that you entered your taxes paid, and let's call it $3,000 for, I don't know, you can't, there's only a limited amount of spaces that you can put in there. And then let's just say that we spent $2,000 on taxes for nice motorboat. All right. And then, so we've already got $5,000. Now, assuming that we have the receipts to back that up, we'll hit the next button. So now we're going to talk about income. So as you're preparing your tax return, you should have your adjusted gross income, which is AGI. You can hit this question mark, and that would be on your Form 1040. So let's just say that your AGI is $100,000. Right below that, you would enter any non-taxable income that you received, whether it's tax-exempt interest like municipal bonds, right, or Series EE or Series I bonds that were used for higher education. Any of these question marks you can select, and it will give you a little bit more information, right? So Social Security, non-taxable combat pay for active duty service members, veterans disability benefits, or other education benefits, things of that nature. So let's just say that our person received $1,000 in municipal bond interest, and then they received $10,000 of a VA disability pension. So the total income is $111,000, and that includes $11,000 of income that was not taxable and not part of AGI. So we're going to hit the next button, and now we're talking about where you lived. So if you lived at the same address, you would enter your primary zip code. If you lived at multiple addresses, like you moved from one place to another, then you can play around. Let's just say that we moved from a Pennsylvania address, so that's Huntington Valley, which is just north of Philadelphia. And let's just say that we lived there for exactly half of the year. And then we moved down to Tampa, and we'll put in a Tampa-based zip code. And then we'll hit the next button. So then after that, we should get our results. Our total sales tax deduction is $6,251.80. That also, basically, that's kind of a proxy for the local sales tax calculations, the state sales tax. And again, this might not reflect actual purchases. So you can play around with this to see if this is going to be a bigger number for you. You can actually print this off and use that as your tax return kind of justification for your records, as long as everything matches up, right? So if you had your receipts from when you bought your Jeep and it actually shows this amount of taxes, your motorboat purchase showed this amount of taxes, your tax return reflects your AGI, and then you have documentation to indicate that you moved from this location to this location. And if you need to go back and make an adjustment, you can say, hey, you know what? I lived in Tampa the entire year and I didn't move at all. So, and then you come up with a slightly different estimate of your sales tax. And then you can compare this to the actual expenses method. You can compare it to your if you decided to work on the sales tax worksheet, you can use that. You can't combine this with your income tax. However, you can combine it with property tax. So if you have a primary residence where you paid taxes on your home in addition, to your mortgage payments, you can include the property tax here, again, up to a maximum of $10,000. So once you know that you're above the $10,000 threshold, you should probably go to the option that requires the least amount of work and complexity, because $10,000 is the absolute limit. So that's all we have for the sales tax deduction calculator. We'll post links to the actual website on the IRS website, as well as some of the other pertinent videos that show how you can calculate your sales tax, and a link to our article on Schedule A. So if you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, please post them in the comment section. Thank you very much and have a great day.